welcome back to the Trading Desk. We've been talking about the stock market last month. We're down 11% year to date, 17% off the highs of that we saw last summer. So we've had a severe sell-off. I was saying it was mostly caused by these financial issues that we're seeing, mortgage problems, et cetera.
Yeah, we actually closed today at new closing lows for the year, for the market. Again, going
Not
back
quite
to
at the lows that we hit in 07.
No, the lows we hit were
though.
3 or 4% below where we were today on the S&Ps. But that being said, it is a new closing low for technicians in the marketplace that is usually viewed as a bearish piece. However, I think we also feel like, I think all of us were talking, we could be getting close to a trading bottom.
Yeah.
And those come very violently, by the way, on the upside in bear markets.
Right.
Probably
And I think it's key to point out the distinction. A trading bottom is you're not structuring your portfolio for the next 5 to 10 years.
Absolutely not.
Maybe in it for a week, a month,
Yeah.
whatever the case may be. And I happen to agree.
Yeah.
I think there's I'm about 50-50 on the fence right now. I think there's a very good possibility this is the beginnings of a new bear market. We can see over the next few years. With all the risks to the consumer that we talked about in the last section, I don't see how we're not going to have a pretty severe recession.
Well, everything's just lining up. You've got the job cuts are coming again. We talked about Wall Street leading. Wall Street is now just really starting to lay off en masse. And they're laying off 20,000 people at Citibank, 20,000 at Merrill. I mean, this stuff trickles down into every aspect.
And the same thing's happening in the UK, in London.
And
all the financial jobs
and when
gone.
and when you look at the fact that we are no longer a manufacturing-based economy, we are service-based. This is a huge hit to the rest of the U.S. when all of your credit facilities, all of your banks are starting to get hit and lay off people. Hey, they're hitting the streets, and there's no jobs to replace those $250,000 a year jobs.
What was it? You and I were talking before the show today. The Citibank news after the close today. That's kind of what I'm starting to see as a possibility that maybe the financials are stabilizing. If I understand it correctly, Citibank came out today and basically said, we're throwing all the cards on the table. This is what we're going to do. And
we're reorganizing our mortgage business. We're not going to get into any of the risky mortgage lending anymore. Going forward, we're going to just do kind of traditional financing, very safe.
They're basically closing up their mortgage shop, and that's worth $45 billion.
And that's where you said that's where Wall Street then comes to Main Street, because that effect's going to be.
But I like your point of a trading bottom here, and I think that's something we should talk about. I know I've said it over and over and over. About trying to time markets, and Jim Rogers, one of my favorite smart money investors I've talked about on the show previously, always talks about he made his fortune fading panic, going against panic. You have panic buyers like you had in the real estate market 2 years ago. You fade that, you made money. If you sold when all those people were buying, you made money. Today, when you're seeing panic selling in the markets, I think if you're willing to step in and buy, take some confidence, and you kind of have to. Check yourself. Check yourself.
Again, if you feel like throwing up, it's probably a good time to buy.
But you can also, it's something we haven't talked about much on the show because it's kind of tough to convey it visually, is that, as a technician, someone who looks at charts, which we all do all day, I can aid you in trying to find that bottom as opposed to just saying, I think we're going to bottom here.
But also, and Jesse talked about this a little bit, I think you can buy a little bit. You can buy a little bit at this price, knowing that it might go down another 5%, another 7%.
We're getting close.
But you could also buy a little here, and you can buy more down, or you can buy it pyramided up. I mean, there's nothing wrong with adding to a winning position. I wouldn't necessarily recommend adding to a losing position, although as traders sometimes we do both.
I think it depends. From a trading perspective, you don't want to add to losers. But from an investing perspective, I see, I start buying a stock that I think is cheap at 25. Well, then I have to believe it's a lot cheaper at 15. So for me, I'm willing to buy lower when it's an investment. If it's a trade, then and it goes a lot lower, then my trade thesis a lot of times has gone wrong, and I have to accept that. So.
It's kind of funny, though, just to kind of be tongue-in-cheek, you get a lot of people in the financial press right now saying this is a good buying opportunity, but I don't ever remember hearing any of these guys. Back in December, nobody saw the top.
One thing I will say about the media, and obviously we're here with with a truly biased opinion, but none of us are trying to sell you anything out here on the streets. So the thing to remember here is who is selling you when they're talking about it on the street, and in fact, why aren't they talking about trying to sell the market at the top?
Whatever asset class you're talking about. I always love to say, repeat Warren Buffett's quote, asking a broker if it's time to buy stock is like asking the barber if it's time to get a haircut.
Exactly.
Same thing asking a realtor if it's time to buy real estate. They all have an incentive to tell you yes.
Right.
And you have to take what they say with a large grain of salt. We need to take a break. Okay. When we get back, we're going to talk a little bit about real estate. Dave and I attended the Talk of the Town taping for last month, real estate focused. Some very interesting points were brought up, and we'll get to that right when we get back.